Okay, so we had quite the week this week, and the other shoe hasn't dropped yet that we know of, anyway, with regards to the banking crisis, and it kind of got to a head this week um, with uh, Silicon Valley Bank and Credit Suisse, and some of the chaos associated with that drove the markets down, then drove them back up because it's a very resilient market at the moment. And then the Fed came out, as I had thought they would do, is they'd keep it to a quarter point, because I think if they would have gone zero or cut the rates, which might have been the prudent thing to do, that would have caused panic in the here, well, globally, I think, because they can see things we can't, and thereby the reason, and therefore the reason that I think that they did a quarter point, because it just was what was expected and everything's calm. It kind of reminds me of Animal House. But anyway, then after the quarter point, which everyone kind of expected, and the markets reacted, relatively positive at that point. But then Powell came out, and as he usually does, he started to make comments. And it wasn't so much that he was talking the markets down. Matter of fact, he kind of indicated they'd be taking it meeting by meeting, instead of you kind of got these hard and fast increases that you were going to be getting on the federal funds rate moving forward. And but when he came out, a lot of the questions about the banking crisis started to come out, and he didn't know many of the answers, or he didn't want to share any of the answers to some of the questions that were out there. A couple of them he seemed rather surprised about, and why he would have been surprised, I don't know. And then Grandma Yellen came out and spoke a few times during the week to quell the madness, I guess, of the banking crisis, but she is a word salad that I just can't follow. I mean, she says things that, I can't quite figure out what she's trying to do. Maybe she's trying to be the Treasury Secretary is still trying to be the Fed chairman, and trying to be careful about what she says and those types of things. And it just, every time she spoke, it caused panic in the markets, at least momentarily. So I quit following her after first couple of interviews that she did. But anyway, this week, let me bring this up here. As predicted, the only thing that really mattered was the FOMC press conference, or the Chairman Powell's Fed press conference on Wednesday. Now, I'll just make note, with all the banking crisis and everything, nobody's even looking at these economic numbers anymore. It's kind of funny to me. But existing home sales were up, greater than consensus, you can see here. We'd been going down on this trend, and all of a sudden we popped back up. Now, that could be because mortgage rates went down and people were trying to grab it while they could. But on Wednesday, the mortgage rate was 6.48%, which I had predicted that it would go down. And this was before the Fed rate decision was announced at 2. And again, I think we'll look for these rates to continue to go down as the panic ensued from the banking crisis. It drove the 10-year Treasury rate down significantly. We'll take a look at that here in just a minute. And then Thursday, what did we have? We had building permits were up greater than forecast. Always, these would be all bad news that the market would react to. Initial jobless claims came in a little bit lighter than expected. That might have caused a reaction, maybe not so much. New home sales was expected to be down 4.5%, was up 1.1%. All these would have destroyed the market normally, but I think everybody is so focused on what's going on with the banking crisis that they're not really worried about what's going on around them. And Friday, durable goods orders came in. Now that would have been something to be positive about in the old days before the banking crisis started. Expecting durable goods orders to go up 0.6 was down 1%, and so that's not good news. I mean, that's saying the economy was down 5 apparently in January, but in February down 1. And what else do we have here? I didn't even really pay attention to what Bullard said or anything. PMI was all of these, the composite, the manufacturing, the services all came in higher than expected today. But it didn't really seem to upset the markets too much. The markets were down most of the day, and then in the afternoon made a comeback. Now, the markets themselves, just kind of take a look here with the Dow Jones, the last, not the minute. Ooh, that's kind of freaky. Looks like a barcode. Okay, so Monday we came down, banking crisis driven. Tuesday kind of recovered from that. Wednesday gapped up a little. Thursday gapped down. It was, I had that wrong. So Monday it went up. Tuesday it went up. Wednesday it gapped down with the Fed talk and not getting clear answers, I think, on the banking crisis. And every time they tried to say something else, like I said, it was word salad, whether it was Powell or Yellen. And then Thursday kind of fought to a draw, doji there. And then Friday, today, he was down most of the day, but it had a nice recovery this afternoon. And kind of got the sense it was there's some momentum there. Same thing with the SPY. Now, I track the SPY typically more often than anything else, but I've added the Qs in here, and primarily because, let me clear this out a little bit, it's not as susceptible to the banking. All seems to be in the SPY, and so I started trading the Qs a little bit more, and I just feel a little bit more comfortable with that because as I mentioned, I'm not sure when the other shoe's going to drop. I believe there will be another banking crisis. There'll be another bank, and there may already be, and they've been able to, stamp the fire out with some of the windows they've opened at the Fed. But, I'm sure there's a lot going on behind the scenes right now that neither you nor I know about. And if you do, let me know. The rest of the things were actually, as you would predict, and I was hoping for, is the 10-year slam down. Now, is this a special cause, and it's going to, come back up in this range up here next week? I guess we'll find out. But this is a flight to safety. People coming in to buy bonds, driving the rates down. This is a significant level. Now, if it stays below here, that would be good for technology. It would be good for the markets. Conversely, the DXY, although not totally, it went down a good part of the week. Remember when it was hitting up in the zone 2 or 3 weeks ago, and now you kind of got, looks like we might be returning back to the zone, but getting below 103.5-ish here was significant from my standpoint. Again, favorable to the markets and, precious metals too. Both these things usually are headwinds to the markets and things like precious metals. Crude, I kept this cone here, and I know I probably can get rid of it now, but we've got this bear flag working right here. And once it broke down, that was put crude oil in a downturn here. And I think I mentioned, I don't follow crude that much. I will in the future. I'm kind of studying up on it, but somewhere in here in this general area between 60 and 65, I think, is where David Hunter seems to follow this much more than I do. A lot of experience with it, and so I don't have any expectation here as far as other than he's saying it's going to be in the low 60s and possibly get up into the mid 80s, and then during his predicted bust, it'll come down. I think maybe he said even in the 30s. So that's crude, VIX. Yeah, it got a little crazy during the course of the week. We spiked up here. Last week started with the crisis. Obviously, we had all this craziness going on, and then in the last 5 days, it spiked up. Not as high as last week, but 28.85, and now it's worked its way back down, and we wound up. I thought maybe the VIX would spike. It looked for a while there like the markets were going to tank this morning, and then they just, like I said, if we can just keep Powell and Yellen from talking, that would be awesome. And then the put-call ratio is a good indicator, basically, of the sentiment that I'll talk about here in just a second. And still elevated. This is kind of the, anything above 0.7 considered to be very bearish. But still, a relatively large amount of volume here, or of puts to calls. So that was that was the markets for this week. And, I think that, well, let's just look here at the bearish sentiment that we had. We actually went up a little bit. Interesting to me, about 2% moved, 0.5% to the bearish side from neutral, and then about 1.5% to the bullish size, but still very elevated bearish type of environment, and I like that. That makes me think that things are going to turn around. I kind of keep an eye on that and the put-call ratio just to see whether things will move up. And then the fear and greed index ended at 34. Now, we were down into extreme fear with the banking chaos that we had last week, but we finished at 34, and I think until people get this banking crisis thing out of their mind, and just ticked down to 33, it's going to remain in the fear, potentially even extreme fear, especially if we haven't somebody else announced that we didn't expect that they have some problems. But like I said, I think there's a lot of stuff going on behind the scenes in the banking industry right now to ensure that any banks that are having problems are being helped, like First Republic. So that's kind of a look there. And so my final comments really, and I spoke about this on my Effective Executive. I do a quarterly look at the economy, and just kind of grab my notes here as I go. But, things seem to be, I look at where we are right now as being like on a balance beam. I've got Peter Schiff on one side, who thinks that everyone's going to fall to the hyperinflation side, and that's what's going to drive everything from here. And then you've got David Hunter, who expects things to fall on the deflation side. And they're kind of two sides of the same coin. Deflation's caused by monetary policy and increasing interest rates and declining confidence, and that's one of the reasons that I've been really watching these things like the Fear and Greed Index and some of these things in the economic calendar here around the consumer confidence. As long as those things don't get too out of hand, and I grant it, these are pretty severe, but more especially the consumer is one of those things that I'm watching, because we know we're getting the increased interest rates from the Fed, so that's becoming more expensive. Is there declining confidence in the consumer? That becomes the question, because then we start into this deflation mode, and it's a cycle. And let me put this screen up here. What it is you have falling prices, a deflationary spiral, falling prices, less production, lower pay, and then drop in demand, which then feeds back into falling prices. So you get this spiral going. And, we've had this happen really once to the full effect, and that was in 1929 when it was a recession that turned into a depression because of this deflationary spiral. Now, I don't know how severe this will get. David Hunter is really one of very few people talking about deflation at this juncture. But he's basically saying that once that happens, obviously, and I've not lived through it. I wasn't around in 1929 to 1933 or whatever the years were, and despite rumors that maybe I have been, that the 1929 recession started just as a recession, and then was degraded to a depression through this deflationary spiral that we're talking about. Now, everybody knows about deflation. Everybody that's hopefully in the Fed or in banking understands what things happen during that time. But I also believe that there's probably some things out there that will be surprises, the unintended consequences of having a deflationary spiral. And because the economy's a little bit different. Now, how much will it be? I don't know. And maybe it won't be anything. But one thing I've learned from studying organizations over the years is, once you start into something that you think you've been in before, it's not exactly the same. And that can create problems in trying to mitigate, a deflationary spiral. And they'll pull out all the things that they believe will be the right things to do. But remember, nobody's alive other than they studied, what happened back in 1929 to be able to know what strings to pull. 2008 was started into, a deflationary spiral, but then there was some resistance to, companies being able to reduce prices, because they had to keep their companies alive, and that kind of kept it from getting out of hand. And so curious to see, which way we fall off of this balance beam. We're going to go to the Peter Schiff route, or are we going to go to the David Hunter route and, get deflation versus hyperinflation? Either way, it's not good. You want to stay up on the balance beam as long as you can. So that's kind of where we're at. And the things that need to happen, I've talked about here over and over again in my commentary, but, it appears that disaster is imminent, unless, immediately we start to shrink government, stop government spending, start paying down the debt that we have, the $31.5 trillion. reduce regulation on business to help drive the economic activity. And, if we can do those types of things, then that's the way to stay on the balance beam. But do you hear anybody talking about any of those things? Really quite the opposite. Maybe the Republicans a little bit, but every time I hear the Republicans talk about stopping government spending, which I agree with, but they're also talking about, stimulate the economy by cutting taxes and things like that. And then, of course, we get nowhere. And we need to really get this debt under control, or it's going to control us. And I think it already has, and we may be beyond the bounds here. I think we're on a balance beam, and we're getting 50 mile an hour gusts while we're up there, hoping that we can stay on and don't go deflation or hyperinflation. So that's what I wanted to cover this week. I hope it kind of gets you thinking a little bit about something that hasn't happened before. I've been watching a bunch of videos on the Great Depression. It's not something that we want to hope for, but it may be the only way out of our current mess to be able to change the psyche and the trajectory of where we're going politically. So that's what I want to cover this week. And remember, there is always a better way.